Why is government always in debt? Wake up! Let me ask you something. If debt is such a bad thing, why is almost every government in the world in debt? Why do countries keep borrowing money year after year, decade after decade, without ever really paying it off? Wake up! Because this is one of the biggest misunderstandings in money, economics, and how the system actually works. Most people hear the words government debt and think, the country is broke. But government debt is not the same as personal debt. A government does not operate like a household. And once you understand that, you start seeing the financial system very differently. The way most people think about debt. Most people think about debt like this. If you spend more than you earn, you go into debt. If you keep doing that, eventually you go broke. That logic makes perfect sense for a person. It makes sense for a family. It even makes sense for many businesses. But governments operate inside a very different system. Because a government is not just a spender. It is also a tax collector, a borrower, a currency issuer, in some cases, and the foundation of the financial system itself that changes everything. Government debt is simply the total amount a government owes because it has borrowed money over time. Why does it borrow? Because governments often spend more money than they collect in taxes. That gap is called a budget deficit. So if a government brings in $1 trillion but spends $1.2 trillion, it has a $200 billion deficit. To cover that gap, it borrows. That borrowing gets added to the national debt. And when this happens year after year, the debt grows. Simple. But here's where it gets interesting. The debt doesn't just exist because the government is bad with money. It exists because the entire modern financial system is built around borrowing, lending, and growth. Who is the government borrowing from? A lot of people imagine governments borrowing from some mysterious foreign power. And yes, foreign countries can own some government debt. But a lot of the time, governments are borrowing from banks, pension funds, insurance companies, investment funds, central banks, and ordinary investors through government bonds. That's important, because in many cases, a government is borrowing from its own financial system, not just from outsiders. So when people say, who do we owe all this money to? A big part of the answer is ourselves, our institutions, and global investors who want safe assets. This is the part most people never learn. Governments borrow by issuing bonds. A bond is basically an IOU. The government says, lend us money today, and we'll pay you interest and repay you later. Investors buy those bonds because they are usually considered low risk compared to many other investments. Why? Because governments have powerful tools. They can tax, they can refinance, and in some cases, they can even influence money creation through their central bank system. So government bonds become one of the safest and most important assets in the economy. And that means something huge. Government debt is not just a problem, it is also a product. It is something financial markets actually want. Wake up! Because this is where the whole conversation changes. Now we get to the real question. Why are governments always in debt? There are a few major reasons. 1. Governments spend more than they collect. This is the obvious one. Governments fund healthcare, schools, roads, defense, welfare programs, public services, infrastructure, emergency support, economic stimulus. And in many countries, that spending is enormous. Sometimes tax revenue isn't enough to cover it all. So they borrow. That's the basic mechanism. But that still doesn't answer why they stay in debt permanently. So let's go deeper. 2. Governments use debt to smooth out the economy. When the economy slows down, people lose jobs, businesses spend less, consumers pull back, tax revenue falls. At the exact moment the economy weakens, the government often needs to spend more, not less. Why? To support the economy. That could mean unemployment support, business assistance, public works, emergency stimulus, rescue packages. In other words, governments often borrow more during bad times to stop the economy from collapsing further. That's why debt rises during recessions, wars, and crises. And from the government's point of view, that borrowing is not always reckless. Sometimes it is the system trying to stabilize itself. 3. Governments rarely pay off. Debt like normal people. This is one of the most important ideas in the whole video. Most people think debt only has one ending. You pay it off completely. That's how personal debt works. But governments often don't fully pay off debt. They roll it over. That means when old debt comes due, they issue new debt to replace it. So instead of eliminating debt entirely, they manage it continuously. Think about that. Governments are not trying to become debt-free the way a family might. They are trying to make sure the debt stays manageable. That's a completely different mindset. Now here's the truly eye-opening part. Government debt is not just tolerated. In many ways, the financial system actually needs it. Why? Because government bonds are used as a safe place to store massive amounts of capital. Banks use them, pension funds use them, insurance companies use them, investors use them, central banks use them. Why? Because they need large, liquid, relatively safe assets. Government bonds provide that. So when a government issues debt, it is not just asking for help. It is also supplying one of the most important financial products in the world. That's why debt markets are huge. That's why government bonds matter so much. That's why this system keeps going. Now, let's clear up something important. A country having debt does not automatically mean it is close to collapse. A government can carry a very large amount of debt for a long time. If investors believe the economy is productive, the government can keep taxing, interest payments can be managed, and the debt can be refinanced. So the key issue is not, is there debt? The key issue is the debt sustainable? That's the real question, because some debt is manageable. Too much debt, combined with weak growth and rising interest costs, that becomes dangerous. Debt to GDP, the metric that matters. This is why economists don't just look at the raw debt number. They look at debt relative to the size of the economy. This is called the debt-to-GDP ratio. GDP is the total value of goods and services produced by an economy. So if a country has a huge economy, it can often support more debt. Just like a person earning $500,000 a year can usually handle more debt than someone earning $30,000 a year. Debt by itself tells you very little. Debt relative to income, or in this case GDP, tells you much more. So when people panic over giant debt numbers without context, they're often missing the real picture. When government debt becomes a real problem. Now let's be balanced. Debt is not harmless. It becomes dangerous when a few things happen. 1. Interest payments become too expensive. If a government owes so much that huge amounts of tax revenue go just to paying interest, that crowds out everything else. Now money that could have gone to infrastructure, education, or public services goes to servicing debt. 2. Investors lose confidence. If investors start believing the government might struggle to repay, refinance, or manage the debt, they demand higher interest rates. That makes borrowing more expensive, and that can spiral. 3. Economic growth slows. If the economy stops growing while debt keeps rising, the burden becomes harder to manage because now the country's ability to support the debt is weaker. So again, debt is not automatically bad, but debt that grows faster than the economy, with rising interest costs and weak confidence, can become a serious threat. Why don't governments just stop borrowing? This sounds simple. Just stop borrowing. Live within your means. But in reality, it's much harder than that. Because if a government suddenly slashes spending to eliminate deficits, it can trigger job losses, lower consumer demand, weaker business activity, slower growth, more financial pain. In some cases, trying to reduce debt too aggressively can damage the economy itself, and then tax revenue falls even more. So governments are constantly balancing growth, stability, inflation, unemployment, interest costs, and public expectations. That's why government finance is not simple accounting. It's economic management. The real difference between you and the government. This is the point I want you to really understand. If you go into too much debt, Eventually, you run out of options. You can't issue bonds to the world. You can't tax millions of people. You can't refinance endlessly at national scale. You can't influence the money system. A government can do things you cannot do. That doesn't mean it is invincible, but it does mean government debt works under different rules than household debt. So when people compare a country's debt to a family credit card bill, they are mixing two completely different systems. Wake up. Because that comparison sounds simple, but it is deeply misleading. The bigger truth: government debt exists because modern economies are built on credit, growth, confidence, and financial markets. Debt helps fund spending. Debt helps stabilize recessions. Debt creates safe assets for investors. Debt supports the system. That is why governments are almost always in debt. Not because every government is stupid, not because every country is broke, but because debt is part of how the system functions. Now, that does not mean unlimited debt is fine. It means the real issue is not whether debt exists. It's whether the debt remains sustainable. So next time you hear, "the government is in debt," don't just react emotionally. Ask better questions. Ask, who is the government borrowing from? Why is it borrowing? Is the debt supporting growth or just covering dysfunction? Can the economy handle the interest costs? Is the debt sustainable relative to GDP? Because once you understand that, you stop seeing government debt as just a scary number. You start seeing it as part of a much larger financial machine. Wake up. The government is not a household. Debt is not always disaster. And the system makes a lot more sense when you stop thinking emotionally and start thinking structurally.